Hey, everyone. My name is Erica Belay, and I am a mortgage loan officer with Best Life Mortgage Corporation. Thank you so much for tuning in, whether you are joining me live or you are joining me on a recording. I really appreciate you coming to learn all about demystifying the jumbo loan. So, just to tell you a little bit about me, I am a mortgage loan officer. I work for a brokerage. That means that as a mortgage broker, I work for my clients. That means that I do not work for the lender. So, I have access to about 20 or so different lenders that all offer different types of loan products. So, I can shop for my clients to find the best loan at the best rates and the best terms to meet your unique needs. And so I live in Kyle, Texas. I grew up in New Braunfels. I can do loans anywhere in the great state of Texas. What I'm talking about tonight pretty much applies to loans all over the country. So it's really great information. But if you are in Texas and you are looking to purchase a home or refinance, I would love to be able to help you. So tonight, as I said, I am talking about demystifying the jumbo home loan. So without further ado, let's get into it. So I guess the first thing we need to talk about is, what is a jumbo loan? What does that even mean? So basically, the difference between this type of home loan and a conforming loan program. So the typical loan that most people think of is considered a conforming loan. Those are your conventional loans. And probably most people don't realize this, but a lot of loans are sold on the secondary market. And so your conforming loans or your government loans follow a set of guidelines that are set by Fannie Mae and Freddie Mac, so that the lender has to abide by, so that Fannie Mae and Freddie Mac will purchase these loans in the bond market. So a conforming loan has loan limits that Freddie and Fannie Mae will not purchase. Fannie Mae and Freddie Mac will not purchase these loans if they don't fall under these conforming loan limits. So for a single family property, the conforming loan limit just increased to $647,200. If it's a 2-unit property like a duplex, the conforming loan limit is $828,700. For a triplex, it's $1,001,650, and for a fourplex, it's approximately $1.2 million. So as long as the loan falls within these limits, then you could essentially do a conforming loan that could be purchased by Freddie or Fannie. But if your loan is going to exceed these limits, then it's considered a jumbo loan. Now, these conforming loan limits are typically the same throughout all of the United States, but there are higher cost areas such as New York, some places in California, I think even Hawaii, that maybe have some higher conforming loan limits. But in general, these are the conforming loan limits across the country. When the loan is, like I said, when the loan is bigger than this, it is a jumbo loan. And so it's going to be a different set of standards, because jumbo loans are not purchased by Freddie and Fannie. They're purchased by private investors, or maybe the lender holds on to these jumbo loans themselves in their own portfolio. So there's going to be some different lending guidelines. Okay. Now that you have a better understanding of the difference between a jumbo home loan and a conforming loan, there are a number of misconceptions out there surrounding the jumbo loan. These misconceptions might keep people from wanting to move forward with a certain property, whether that be because you have a fear or you lack an understanding of this typical loan. But hopefully this seminar will help you understand that the jumbo loan has really gotten a lot better in recent years compared to jumbo loans of the past. And many of the myths from the past just don't stand anymore. So let's bust some of these myths associated with a jumbo loan. Myth number one is that interest rates are astronomically higher. Yes, it is true that the interest rates for a jumbo loan are slightly higher than the common conventional loan because they are a bigger risk for the lender. But that being said, the interest rates are typically only about 0.5% to maybe 1.5% higher than a conventional loan. And just like conventional loans, a jumbo loan interest rate depends on so many different factors. So we get people all the time asking, what are your rates right now? What are your rates right now? Lenders can't really answer the question, what are your rates? Because there are so many factors that go into an interest rate, including credit score, including the down payment that you make, your debt to income ratio, so many different things, the loan to value, all of these different things go into the rates. So it's a really difficult question for a lender just to be able to quote you rates without actually getting a clear picture of your financial situation and what your down payments are going to be. But for a jumbo loan, the minimum credit score is usually between 680 and 700. So as long as you have a 680 to 700 credit score, you should be able to qualify credit wise for a jumbo loan. And obviously the better your credit, the better your interest rates are. Okay, moving on to myth number two. The jumbo loan is used only for single family luxury properties. Well, this would be very rigid. It would make the jumbo loan seem very rigid without any flexibility, but it's not the case. Jumbo loans can be used for any properties anywhere from 1 to 4 unit properties, condos, duplexes, quadplexes. And again, if the loan amount is higher than those conforming loan limits that I showed on the earlier slide, then you might have to go into a jumbo product. Jumbo loans can range anywhere from a 15-year term to a 30-year term. And there are different interest rate options. You could do fixed interest rate, you could do adjustable interest rate, or you could even do some interest-only options on a jumbo loan. So there is a lot more flexibility with these jumbo loans than there used to be in the past. So let's talk a little bit about down payment. So myth number 3 is that a jumbo loan requires a larger than life down payment, but that's just not the case anymore. In the past, one of the biggest hurdles for home buyers to get into homes was the seemingly impossible amount of assets that were required, adding on to this the requirements for reserves. So this is not necessarily the case anymore. Unlike the requirements of the past, lenders have had for jumbo loans, we're seeing down payments that are lower than 20%, lower than 15%. We even have some lenders that will go as low as 10.01% down payment of the 10.01 down payment of the purchase price. So it is possible to get into these jumbo loans without quite as much of a down payment as there used to be. Now, qualifying for the lower down payment, you typically have to have a higher credit score to qualify for those lower down payments. And you are going to have some cash reserves, usually between 6 and 12 months, and a low debt to income ratio. So these are just some different things that we can look at. So if you are in the market for one of these jumbo loans, we look at your situation and we see if your credit and if your cash reserves and if your assets will qualify you for some of these lower down payments. The myth number 4 is that jumbo loans will always have PMI. PMI, also known as private mortgage insurance. Now, typically on a conventional loan, if you put less than 20% down, then you have to pay mortgage insurance. Now, I do have a lender on a conventional loan, as long as you put 10% down or just over 10% down, you will not have to pay that mortgage insurance. But in general, with a conventional loan, if you put less than 20% down, you have to pay mortgage insurance. But That's not necessarily the case with a jumbo loan. And to mitigate this higher risk for the lenders, they normally require a higher cash reserve, like 6 to 12 months of cash reserves. And they have maybe slightly stricter credit requirements or debt to income ratios to so that you don't have to pay the mortgage insurance. You just have to have those cash reserves so so that the lender to mitigate the risk for the lender. So that's basically the myth. I don't want anybody to be fearful of a jumbo loan. If you're looking for a house in these bigger price points, jumbo loans are really a great product. In the past, others have done some things such as maybe you've heard of like an 80-20, where maybe you do two different loans and you maybe get a loan for 20%, and then the 80% would be in a conventional loan so that you can avoid jumbo loans. So there's some other options to avoid a jumbo loan, but really with the interest rates only being 0.5% to 1.5% higher, it might be a better option just to go with that jumbo loan and the one closing cost of the jumbo loan. So as you are thinking about, looking for a loan officer to work with, I want you to look into purchasing and refinancing. When you're looking into your loan officer, you want to have a loan officer that's going to listen, that's going to understand, and that's going to guide you through the intricacies of these buying processes, because everybody's situation is different. There is no one loan that's just going to work for everybody. We have all of these different products, and I'd love to be the loan officer that helps you. As I said earlier, as a brokerage, I have access to 20 or so different lenders. I have multiple lenders that do jumbo loans, so I can figure out which jumbo loan product is going to be the best for you. I have multiple lenders that do conventional, that do some all different kinds of programs, bank statement programs, debt service coverage programs, so all these different types of programs. So ultimately, you want a loan officer that's going to listen to your situation, really get a clear picture of where you're at and what your financial needs are and what your unique needs are, so that we can find the best product for you. And so I'd love to be that loan officer to help you out. I'd like to talk a little bit now about my company, Best Life Mortgage. So Best Life Mortgage, we want to help you find the best mortgage with the best rate and terms available for your financial needs. So in the vast ocean of mortgage lending, Best Life Mortgage is the lighthouse. We want to lead the way in lending, helping home buyers secure the best rates. So I want you to avoid paying unnecessary fees. And I want you to get into those new homes as quickly as you can. My company's mission is to really, we're called Best Life Mortgage because we want to help everybody lead their best life. And so we want to provide you a first-class experience. We want to empower you to embody a growth mindset. And we also are a tithing company. We give 10% of our corporate profits to a company called Destiny Rescue, which is such an awesome cause that it liberates children from and women from human trafficking. They do some different missions to help rescue these kids and these women from horrible situations, and do some counseling and help them get past some of the things that they've been exposed to so that they can lead their best life. And so we would love for you to be a part of this mission with us. If you have any questions, and if I can help you with any of your home loan, whether it's a purchase or a refinance, please give me a call. My cell phone number is 210-279-4392. Or you can email me at ericabelay@bestlifemortgage.com. I just don't want anybody out there to have any fears about purchasing a home. There are so many different products out there for you. Give me a call. I'd love to be able to help you find the product to meet your needs. Have a great night.